Hey everyone, welcome back to Corporate Decoder, the place where we take those complicated corporate filings and make them, well, a little less complicated. Today we are going to be looking at an amended 10K report from Intra-Cellular Therapies. It is like someone filed their taxes and then realized they forgot to include a crucial deduction. This report has some interesting updates, including a cash retention bonus and some executive trading plans. So buckle up and let's dive in. So what is the reason for this update? Well, they needed to add information about the company's directors, executive officers, and some updates to the exhibit list, including new certifications. Plus, someone got a retention bonus and they have to disclose that. Importantly, the company is standing by everything else that was in the original report. Speaking of bonuses, Dr. Suresh Durgam, who is the Executive Vice President and Chief Medical Officer, is getting a retention bonus of $800,000. It is like a please don't leave us payment. This bonus will vest or become fully his over time with 50% on the date the Johnson & Johnson merger closes and the other 50% a year later if he sticks around. If he gets fired without a good reason or he quits for a good reason, he gets the whole bonus, assuming he signs a release, which is a document that says he won't sue the company. The report also tells us about some trading plans adopted by directors and executive officers. These are called Rule 10b-51 trading arrangements. Basically, these plans allow company insiders to sell shares at predetermined times to avoid accusations of insider trading. It is like setting up an automatic stock selling machine. Otto Reader, Robert Van Nostrand adopted a sales plan in December, but then stopped it in January. Finally, the chairman and CEO, Sharon Mates, adopted a sales plan in December, but then stopped it in January. Finally, the chairman and CEO, Sharon Mates, adopted a sales plan in December, but then stopped it in January. Mainly, the chairman and CEO, Sharon Mates, adopted a sales plan in December, but then stopped it in January. Now let's talk about executive compensation, which is how much the top people get paid. This section of the report lists the company's named executive officers. These are the folks whose pay is public. In this report, you have the CEO, Sharon Mates, Michael Halstead, who is the president, Sanjeev Narula, the chief financial officer, Suresh Durgam, the chief medical officer, Mark Newman, the chief commercial officer, and Lawrence Heinlein, the former CFO. The company says that their executive compensation is all about paying for how well the company performs, so aligning what the executives get with what the shareholders want. They emphasize at-risk compensation, which means executives have to earn a big chunk of their pay through bonuses and stock options. Okay, let's look at these annual bonuses. You have to understand these are target bonuses and whether they get paid out depends on performance. The CEO had a target bonus of 100% of his salary, Mr. Halstead at 55%, and everyone else is at 50%. But check this out, the actual bonuses they got were much higher than the targets. For example, the CEO received a bonus of almost 2.5 times his salary. The others also got double what was targeted. So how did that happen? Well, the report says it came down to great financial performance, growth in the sales of their drug Caplyta, and the expansion of their commercial and clinical functions. The executives met a revenue goal, expanded their teams, and progressed in clinical trials. Now, let's discuss equity awards, which are like giving executives a piece of the company. In 2024, they gave stock options and something called performance-based restricted stock units, or PRSUs. PRSUs are tied to how well the company performs. In this case, it was based on the company's total stockholder return compared to other companies in the Nasdaq Biotechnology Index, and the achievement of certain clinical milestones. Changing control is just a fancy way of saying what happens to the executives if the company is sold or there is a big change in ownership. The executive employment agreements say that they will receive severance payments and benefits if they are terminated or quit for a good reason around the time the company is sold. It is like an insurance policy for the top people. Here is where it gets interesting. This table summarizes all the compensation for the top executives. It breaks down things like salary, bonus, stock awards, and other compensation. In 2024, Sharon Mates, the CEO, made over $13 million. A lot of that came from stock awards, which are now over $9 million. The others, like Michael Halstead and Suresh Durgam, also had total compensation in the millions. Also, note the CEO got over $2 million in bonus. Everyone else got less than $1 million. Here we can see that the CEO had rights to over 1.5 million shares in the company, and Michael Halstead has rights to over 70,000 shares. It is like they are incentivized to make sure the stock does well, so they also make money. How much do the directors get paid? You can see the other directors, meaning those who aren't employees, each got around $500,000, mostly in the form of stock and option awards. Robert Van Nostrand got a bit more, likely because he is the lead independent director. There was a related party transaction mentioned. The company leases office space in New York. One of their directors, Joel Marcus, is the boss at Alexandria Real Estate Equities, which is the parent company of the landlord. This is just a business deal, but it has to be disclosed because there is a connection with a director. Lastly, the board has determined that all directors are independent except the CEO. It is important to have independent directors to make sure there are no conflicts of interest. Now let's zoom out and discuss my overall thoughts. Intra-Cellular Therapies had a pretty good year, but there is a merger on the way. The executives are getting paid well. The key thing to watch is the merger with Johnson & Johnson. A big question is whether the merger will actually happen, as it depends on the approval of shareholders if the sales team are also doing very well, but how much of that is on the executive team and how much of it is just having a good product and salespeople. The CEO is getting paid a lot, and that's a potential risk because as any one person gets a lot of power, it can also be a liability. Overall, Intra-Cellular Therapies seems to be in a strong position for now, but it is at an inflection point and the future depends on what happens next with the Johnson & Johnson merger, and I will definitely be keeping an eye on that. Thanks for watching. If you found this breakdown helpful, please like, subscribe and leave a comment below. What do you think about this merger?